the futures market is a lot less liquid. Open interest is not going up or down that much. It seems like whoever was saying, and I think Keith Weiner was leading the charge on this, that Basel III would do nothing positive or negative for gold. It would just increase volatility in the daily price swings. I think that's what's playing out now. One day, gold's going to be up like $500, and we're going to be like, oh, whatever. And then it's going to be up $1,000. And then we're gonna be up whatever, and that's gonna be down 800. And this is gonna be, it's gonna get crazier and crazier as we head to the end game, and then one day it's just gonna stop trading, and then it'll be done.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for Memorial Day through June 2nd, 2025, while supplies last. First this week, we featured 2025 1/10-ounce gold eagles at just $59.99 over melt. Next, backdated 1-ounce silver eagles are just $4.79 over spot. And finally, constitutional 90% silver dimes and quarters are just $1.99 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor on Substack. Rafi, thank you so much for joining us today.
Hey Elijah, it's always good to be back here.
Well, it's great to have you today. There are a few topics I wanted to discuss. First and foremost, I did want to get your perspective, and you've been reporting on this as well. The ECB warning about, it seems like kind of warning about the leverage in the gold market and how it could, with the gold price continuing to rise, how it could, really reverberate throughout the financial system. And you've pointed out that this really means that gold is more than just a commodity, and that the ECB is acknowledging this.
Yeah, they wouldn't be writing about it if it was just another commodity. I mean, they're not saying anything about oil. They're not saying anything about nickel, which was a problem in March 2022. They're not saying anything about any other commodity except gold. And now, but what importance does gold have to the ECB and its member banks? If you're a Keynesian, then it's just what do they call it? They call it a barbarous relic. It has no connection to the monetary system anymore. Even people in the libertarian camp, they say, we're no longer on the gold standard, so there's no connection, so it doesn't matter anymore. But then why would the ECB be so worried about gold specifically? This goes back to it's ancient, I guess, ancient in the sense that libertarians have been arguing with ourselves about this, about is there systemic manipulation in the gold market or is there not? I'm on the not camp, not in the sense that I don't think there is any manipulation, but I don't think the manipulation is conscious. I just think it's a result of the system that we currently have. Now, the ECB looking at the leverage in the gold market, they're kind of stumped by it as well. They don't really understand why it's there, but it's a natural consequence of the propping up of the dollar and of all other currencies. I think I said this in a previous interview. I don't remember who it was with, but someone was asking me, like, who do I blame for the manipulation, the so-called manipulation in the gold and silver market? And I say, I blame myself. And I blame you too, because we all own dollars to some extent. And if we own dollars, therefore we are short gold and silver, because gold and silver are the derivative of those dollars. Now, the leverage in the system from the pressure, I guess the logical pressure of the regression principle, that the so-called fiat system had to start from issuing debt on top of a given gold reserve, those extra dollars filter back into the gold market through the futures and create what looks like manipulation. But it's just people following spreads and traders following where they can make a quick buck by bridging a spread and making a market, and happens to be in the gold market because that's where the dollar comes from. So rather than to say that it's a conscious manipulation by an elite group of people that are saying, oh, ho, ho, stroking their beards and and saying, oh, we're going to manipulate the gold market and that's how we will keep the dollar alive and that's how we will enslave humanity by suppressing gold and silver prices, ho, ho, ho. It's not that. It's just a natural consequence of the system. And that's what the ECB is realizing without even like realizing what they're even saying so much. They're as confused as every other bank. They don't get why it's such a dangerous position for the bank system to be in. They're like, well, what does gold have to do with any of this? But they're looking at the positions. They have the inside scoop on it, right? They know which banks have what positions because they're in charge of all the banks, right? They're the central banks, and they're like, wow, well, if this blows up, then everyone's balance sheets are going to have holes in them because everyone's so short gold. Why is that? Why are they doing that? That's just how the system forces them to. It's what the system forces them to do because the dollar is a gold derivative. That's how it naturally winds up or unwinds.
I think that's a very interesting perspective, and that goes back to the idea that the only reason the dollar has value today is because it had value yesterday, and if you continue that backwards, you get back to gold. Is that the idea that the dollar is kind of inversely related to gold?
Yes, that is the idea, and that's what's so hard for many people to accept, because not that they don't see it logically. They say, okay, fine, logically I get your point, but the reasoning it goes so far back, and it's like, why does it have to be that way? And it's hard. It's just hard for people to look like, okay, so it's logical, but therefore, when they go to a store and they give $1 for groceries, they only see their own consciousness of it. They don't connect it to past decisions, and it's hard. It's very hard to. You can't do it because we don't live past lives, right? Maybe somebody could have deja vu of a previous incarnation that they had in the 19th century when they were using gold coins and they called it $1. But most of us don't have that, so it's very difficult for people to accept it, and it's also difficult for central banks to accept it. But still, the fact is we are on a pyramid of economic decisions that this pyramid began either in 1873 with the end of the bimetallic standard, or in 1933 with the end of the gold standard, or in 1971 with the severing of the gold window. Really, those are just different stages in the same process. So it doesn't really matter where you count it from. It's all the same process over and over again. But I mean, this is where we are, and this is why when it all falls down, we're going to have to go all the way back in time, right? Because when this chain breaks, there's no other alternative than to go back in time to when you can last grab onto the chain, take hold of it, and keep going. And that's a very disruptive process, and a lot of people can't get through it. But we're going to be, that's another way to picture what the stacker's responsibility is. It's to take the gold from this generation, connect it to the chain back to when it was money directly, and then rebuild the economic chain from there to connect the past to the present, and bypass all the theft that happened in the middle, which it's going to be problematic. That's the only way we can do it.
No, as you mentioned, a lot of people, even on our channel, believe there is systemic manipulation of the precious metal markets. But your point is that it's kind of built into the system, and how the system works is that's kind of a necessity. Do you believe that the prices are suppressed in some way, that gold and silver should be a lot higher given the amount of currency out there? Or what is your view on, like, do you believe that the metals are actually held down by these big institutions?
Yeah, they are held down, but by inertia. See, there's a double-edged sword here. When somebody says in our community, the gold and silver prices are suppressed, if they weren't suppressed, we'd have a lot more purchasing power and everything would be better. I know I'm oversimplifying what they're saying, but like basically that's what they're saying. Why does manipulation end? And when it ends, we'll be back on sound money, everything will be better. That's true if you take it in broad strokes. I'm not arguing that. But it's a double-edged sword, because if the manipulation ends, what they call the manipulation, what I'll agree is manipulation in a broad sense, like, okay, so I'm not entirely disagreeing. When that ends, we're going to be at the end game. and then everything's going to collapse. I mean, so on the one hand, we're benefiting from the fact that gold and silver prices are being manipulated because it's enabling us to prepare. On the other hand, we want it to happen already. The minute this manipulation ends, the dollar will die. However you define the manipulation, whether you think it's an active group of people that are trying to do this, or whether you think it's part of the system like I do, even if you think it's an active group of people that are nefarious, what I don't agree with, what I think is wrong, is to say that if it is an active group of people, they can continue doing this forever. They can't. That's impossible. That's what the sort of the black-pilled stackers, or the black-pilled people, the ones that can't take a victory, or they see everything as doomed, and the people in power they can do anything they want, and we're just a bunch of serfs. I don't take that view. That I will fight that view. Like, I disagree with that 100%. Even if you think that they're in charge and they're nefarious, they're gonna fail. So just, whether we think it's active or passive isn't really going to change what's going to happen. So I suggest that whatever camp you're in, we want the same things. However we see it happening, it's happening. And let's prepare for the end of it, because that's coming.
And some of the signs of the end game we can maybe touch on now, where it seems like there are cracks appearing in the debt markets throughout the world. We see some issues in Japan, but you've mentioned how it's really not just in Japan. Long-term bonds, the long-term bond market, it seems like everywhere is in trouble. Can you expand a bit on this?
Yeah, so I looked at Japan. I was just looking I think last week at the 40-year. I think Japan is one of the only countries that have bonds that go out that far. And the fact that bonds even go out that far, like half the lifespan of a human being, shows itself that we're in a desperate state. Because 30-year bonds didn't exist in the early 20th century. Those are relatively new. And then you have these rumors of a 100-year bond coming out of Switzerland. But the problem is that it's not just like, let's take for example Japan. There was a headline that came out, I think I saw it on Zero Hedge, that these life insurance companies, how do life insurance companies, when you pay them, what do they put their money in? They put it in the safest asset as defined by the government. And of course, the government's going to define its own assets as the safest because it wants insurance companies to buy their paper so that they can continue spending. So it crowds all the life insurance companies into the same assets. So they all have to buy. It's not like people are making decisions like they're like a CEO of a life insurance company is like, well, I think that 30-year bonds are the safest asset. Therefore, I want, the best assets for my clients, and I will pick these because I am a responsible life insurance fund investor guy. So that's not it at all. It's like they have to follow a rule book, and the government gives them a rule book. You have to buy our bonds. Okay, fine, buy your bonds. And then when it all goes down, like the insurance companies will well, now we're losing and we can't pay out the insurance policies. So what are we going to do? But that's the same. It's the same problem everywhere. It's like if you want to, like in Israel, I have to deal with this. If you want a tax break, you want to get taxed like 25% instead of 40%. Then you have to have a certain percentage of your income in Israel bonds or in whatever they call Igra Chov here, whatever it is, whatever the government wants you to do. So it's going to be the same in the whole world. And therefore, everyone's going to crowd into the same stuff as safe. And then everyone's going to fall at the same time. So if you can go on tradingeconomics.com and you can search 30-year bonds of country after country after country, and you can see that almost all of them have broken support lines, or was it resistance lines? We were talking about yields, so the higher they go. So resistance lines, right? So I was looking at the UK. The UK has also broken resistance that we haven't seen since 1998, since the Asian financial crisis. And the Asian financial crisis is when capital moved from the east to the west because the Asian currencies were crashing, and then a whole bunch of capital went into Western bonds. So we haven't seen interest rates this high since then in the UK. And the UK has its own problems with its own life insurance companies. In September 2022, the LDI, liability-driven investment schemes, started breaking down. So it'll be something slightly different, but it'll also be based on 30-year bonds. They're breaking down everywhere. And when they break down everywhere, because all of the currencies of all the derivatives and all the dollars and all the derivatives of the dollars are based on the debt of the respective sovereigns that issue those currencies, or the central banks that issue those currencies, then when the debt markets fall, all the currencies fall at the same time. And the end game is sort of like if you're on an island and tsunamis are coming at you from all directions at the same time, and then it just overfloods your little island of what you think is stability. That's what it looks like is happening.
So also we're seeing in the US, obviously we saw the last debt downgrade. So back in 2011, and I believe it was just a few years ago as well, we saw downgrades from the two rating agencies, but now finally Moody's has downgraded the US debt. So do you think there's any significance beyond just maybe being a little symbolic here, but any significance of this debt downgrade by Moody's?
Yeah, I think it's significant. Not that it doesn't change the reality of what the bond is or what the U.S. debt is. It didn't change from the day before the downgrade to the day after. But as we can all see from basically any sector of Western society that we are in, that everything is algorithm based. That for example, in the medical industry, doctors don't really prescribe for their patients. There's something called the standard of care, that if the doctor doesn't want to get sued, they have to, okay, so you identify symptoms, you determine that it is such and such a disease, you look up in the book what the standard of care is, and you match the symptoms to what the standard of care is. You don't take into account any of the patient's personal history or preferences or whatever. You just say, okay, this is standard of care issued by regulatory agency ABC, so you do that, and then you're not sued. So there's no thinking here. Everything is algorithmic. It's the same thing in education. It's the same thing in politics. It's the same thing everywhere. So it's the same thing in bond ratings too, right? Now, when Moody's has to say, because everything is so algorithmically based and there's no individual thought, if they have to say that, okay, we're not, according to Moody's, we're not AAA or whatever the rating is, or now we're AA1, well, they look at the rule book and they say, well, I have to invest a certain amount of whatever this fund is into AAA. So now that these bonds that were AAA are now AA1, I have to sell those and I have to move into, I don't know, Swiss bonds or whatever is still AAA. So you have those kinds of shakeups, and if they're big enough, they can cause a torrent or a flood in some direction or other, which could impact something else. It depends. I don't know if these automatic switches have been disconnected but prior to Moody's making this downgrade. Maybe they called some insurance company up, or maybe they had a meeting behind closed doors of a whole bunch of multi-billion-dollar funds and said, look, we're going to downgrade U.S. debt in the next few weeks. Just make sure that you have your rules changed so that you don't have to immediately sell it and start a selling torrent and then disrupt the financial system. That could have happened. I have no proof of it, but it sounds like it's definitely reasonable.
Now, moving forward here, it seems like if what you're saying is going to play out with respect to the end game, there would be many, many more downgrades before then. How do you see this playing out, and how do you see the financial system reacting to these downgrades?
I don't think there's going to be a torrent of downgrades before the end game. These financial hiccups, they happen suddenly and they catch everyone off guard except for the people who've been expecting them for years, and we're always told that we're ahead of, we're so far ahead of the curve that we're stupid, or we're just bad timers, and maybe that's true to some extent, but we still know it's coming. So when it does happen, it's going to be all of a sudden. It's not like, okay, so Moody's and S&P and Fitch are going to downgrade to A, and then A minus. When we finally get to BBB or whatever it is, then there's going to be an end game. No, there's going to be an end. There's going to be a huge torrent of a sell-off and bond spreads, blowing up the wazoo, and panic in the streets. And then there's going to be these huge meetings by the Federal Reserve, and central banks are going to meet in some island, and they're going to decide what they're going to do, and they're going to call up each other, and then there's going to be a dollar swap line. The same stuff we saw in 2008 and all the other times. And something's going to happen. They're going to print a bunch of money, and that's going to be it. I don't think that these downgrades are what's going to cause an endgame. I think that that Moody's is saying to itself, I don't want to be the last rating agency, or we don't want to be the last rating agency to give US that AAA ratings, because if we're the last one, they're going to pin everything on us. So we're just going to match our competitors so that we don't get any special blame. It's all just politics. That's what it is. And if you watch the what's that movie in 2015, The Big Short, right? That's basically how S&P or Moody's or whatever that scene was, whatever rating agency it happened to be, who said, so we're selling ratings for cash. So that's what they're doing. They don't want to be the last one out, and so they're joining their friends.
Now, when it comes to the gold and silver markets and also the stock market, I wanted to get your perspective on the price action recently. We've seen a little bit of a rebound in the stock market today as we record this on May 27th. We've also seen gold and silver sell off a bit, but it seems like gold and silver seem to be holding pretty well. And it seems like they're showing strength, definitely. So your perspective on, I guess, the recent action in the gold and silver markets.
So this reminds me of another argument that has been raging in the stackers community. What's the effect of Basel III? And some people have thought that it would be positive for gold prices. Some people have thought that it would be negative for gold prices. But where I fall out is that it won't be positive or negative. It'll just make everything more volatile. I don't want to get into the technicals of it now or why that is, but basically, if Basel III should make it more difficult for market-making bullion banks to buy gold to sellers and sell gold to buyers, which is what they do. Right? They buy gold from sellers in London and they sell gold to buyers in New York, and that's why they have perpetual short positions in New York and perpetual long positions in London. And they make the market, and by making the market, you make it more liquid, and that by making it more liquid, you dampen the price changes. You add liquidity, you make up days less up and down days less down. Right? That's the point of it. So what we've been seeing since Basel III has been implemented is less movement in the open interest in New York. Right? You see these huge moves in gold, $100 up, $100 down, $150 up, $150 down. And in a $70, $80 move, I don't know if what your experience has been, but I'm looking at my screen. I'm like, oh, another one of those, whatever, it'll be up tomorrow, or it'll reverse itself in a day or two or a week or whatever it's going to be. It's not like I remember in 2013 when suddenly in April 2013 gold was down like $100, and the stomach like dropped. You're saying like you feel kind of nauseous like this. I'm like, well, whatever, it's $70-$80. Who cares? And it seems like the futures market is a lot less liquid. Open interest is not going up or down that much. So it seems like whoever was saying, and I think Keith Weiner was leading the charge on this, that Basel III would do nothing positive or negative for gold. It would just increase volatility in the daily price swings. I think that's what's playing out now. I mean, we'll see if it continues, but we're getting habituated to it. So one day gold's going to be up like $500, and we're going to be like, oh, whatever, and then it's going to be up $1,000. And then we're going to be up whatever, and then it's going to be down 800. And this is going to be, it's going to get crazier and crazier as we head to the end game. And then one day it's just going to stop trading, and then it'll be done.
It's good to reflect kind of on the big picture, as you just have done, where you're saying, we're going to see this volatility, but at the end of the game, it's not going to matter. So I think if we're looking at these prices on a daily basis, it's good to remember, what is the long game that we're here for?
It's not that long. It's like, I would call it a mid game now. I mean, we'll see. But yeah, I guess in the scheme of things, it's still a long game, even though I don't think it's that far off now.
And if our viewers are interested in continuing to track this with you, they can go to the Endgame Investor on Substack. We'll put a link in the description right there. You'll be able to see this if you're watching on YouTube or any of the other platforms. So if our viewers are interested in learning more, can you tell us a bit about your Substack?
Yes. The goal of my Substack is to get people to calm down. Basically, it's get myself to calm down, because I have these thoughts and I get nervous too. And then when I rethink the logic and put it through my head, I was like, okay, there's nothing for me to really worry about so much. And once you're in that headspace, nothing can really affect you. As long as you're not stupid in, let's say, zeroing out all of your dollars to buy gold or silver, right now, and then if it goes down $200, you're down 20% in your portfolio and you start freaking out. Obviously, I support, doing things gradually and smartly, and not taking any crazy bets, even on gold and silver themselves. But it's basically, the goal is to spread fundamental, positivist, layered, logical understanding, so that you know exactly where you're coming from, and you know where you're going, and you don't have to worry so much anymore. If I can do that for just a few people, a handful of people, then I've done my job. And I've calmed people down for when we do get to an endgame and they're not freaking out about what I'm going to do next, because they know that their responsibility now is to spend money and get the economic bloodstream flowing again and get the heart pumping and save whatever's left of society. So check out my YouTube channel, Rafi Farber. You can also check out Endgame Investor on YouTube. It'll lead you to the same place. Check out my Substack, and you can also check out my Patreon, where I give a more religious focused message on these topics.
Fantastic. Well, Rafi, really appreciate your time today, and God bless.
You too.
This is Kaiser Johnson with Liberty in Finance, and these are the Miles Franklin weekly specials for Memorial Day through June 2nd, 2025, while supplies last. First this week, we featured 2025 1/10 ounce gold eagles at just $59.99 over melt. Next, backdated 1 ounce silver eagles are just $4.79 over spot. And finally, constitutional 90% silver dimes and quarters are just $1.99 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.